Hi, everyone. My name is Amar Anand. I'm a co-founder and CIO of AIML, a systematic platform for digital investment strategies. It's my great pleasure to present our investment pitch to the Venom VC Fund. I've been on the buy side for over 20 years across some of the leading asset management firms globally, across venture, private equity, and hedge funds. We started our blockchain and digital asset journey back in 2017 when we spun out the data science team of the hedge fund to create AIML. AML is a platform that includes both prop and third-party digital investment strategies. On the prop side, we've trained thousands of models for over 60 digital assets using AI-based price prediction models. On the third-party side, we offer a backtesting and cap intro platform that allows other investors to post their digital strategies where we can then allocate capital if we see fit going forward. The problem we aim to solve: to create a digital investment platform, something like a millennium, that democratizes both the manufacturing side, where talented quants can submit digital trading strategies and get access to capital, and the distribution side, where investors that are looking for exposure to digital assets can choose from a stable of high-quality options. We've always believed that a platform is more valuable than an individual fund, and we think that digital assets are no different. We've been trading these models and this platform for now over 3 years. We started on the prop side with technical analysis models, which you may have seen in the fiat quant world, that look at trend, momentum, convergence, support, resistance, etc. We then found very quickly that these models are very conducive to applying machine learning techniques. And so we started off with LSTMs and CNNs that worked well in modeling and predicting prices. So that was the first generation of the ML1. In the ML2, we started incorporating sentiment features using natural language processing and generative AI. In ML3, we started adding attention models, which are deep learning techniques that permit our decoders to utilize the most relevant parts of the input sequence. In the ML-MVO, we started using Markowitz mean variance optimization, which was in essence to really create the platform where investors can identify what is their risk appetite, and we can then find portfolios on the efficient frontier with the maximum expected return using our underlying AI models. And finally, in the latest regime, we've been working on a mother model that tries to predict regime changes. And it does that by not only looking at all the blockchain data, but also looking at fiat data and data from our derivative exchanges that have some very powerful signals. And that allows us to identify when we're moving from a low vol to high vol regime and vice versa. On the prop side, we offer both a directional long-only strategy and a market-neutral long-short strategy as our two flagship strategies. Here we show the returns of the long-only strategy, which went live in August 2020. So as you can see here, that's the starting date, and then the goal line is what we call AUROVILLE, which has delivered an inception-to-date return of 387% till now versus Bitcoin's 107%, thereby outperforming by 280 percentage points. On the market neutral side, our rabbit has yielded an inception-to-date return of 20% versus Bitcoin's minus 53, thereby generating an alpha of 77% from April 2021 to date. The objective in the long-short fund is to maximize absolute return while dampening volatility and drawdowns. Gross exposures range between 100 and 200% of NAV, so not that much leverage. And net exposures target 0% with a target downside vol of 15 to 30%. I'll now pass it on to my co-founders, Saurabh and Kirti, to talk about the underlying architecture of our prop models. Before we do that, I'm pleased to show you this final slide, which shows that we're actually negatively correlated to the market by minus 0.21, which is the holy grail even in fiat. But without further ado, Saurabh, over to you.